RYCEY Rolls-Royce Holdings plc Fundamental and Technical Analysis Strong Buy Rating. Rolls-Royce Holdings plc, a British multinational engineering company that specializes in the manufacturing of aircraft engines, power systems, and other aerospace and defense technologies. Rolls-Royce is known for its high-performance engines used in various applications, including commercial and military aircraft, as well as marine and industrial applications. Rolls-Royce Company's activities include civil aerospace, defense, power systems, and new markets. Rolls-Royce has a long history and a diverse range of products and services, including aero engines for commercial and military aircraft, naval engines, power generation solutions, and even involvement in the development of small modular reactors for new electrical power solutions. Its headquarters are located in London, UK, and it has a global presence in the industrial technology sector. 1. Income statement. The financial data reflects the performance of an unidentified company over the past 10 years, from 2013 to 2022. Revenues have shown fluctuations, with a peak in 2018 at $24.26 billion and a decline in subsequent years. Gross profit has also varied, with the highest point at $4.99 billion in 2014. Operating income experienced significant fluctuations, turning positive in 2014 and peaking at $2.11 billion in 2019. However, earnings from continuing operations were inconsistent, with losses in some years, likely due to various factors impacting the company's operations. The company's profitability metrics, as reflected in the basic and diluted earnings per share (EPS), were volatile, with both positive and negative figures. The effective tax rate also showed considerable variability, reaching a high of 225.4% in 2013. Overall, the financial performance seems to have faced challenges, including fluctuations in revenues and profitability, which may have been influenced by factors like interest expenses, currency exchange gains or losses, and other non-operating income or expenses. 2. Balance sheet. Between 2013 to 2022, the company's total assets steadily increased from $35.6 billion in 2013 to $38.2 billion in 2022. However, the company faced challenges with its liabilities, which fluctuated over the years. Total common equity displayed variations, starting with negative values and gradually increasing to $9.3 billion by 2022. In the asset section, notable components include cash and short-term investments, receivables, current assets, and long-term assets. The company maintained a substantial cash reserve, with cash and equivalents exceeding $6.6 billion in 2022. Receivables and current assets also exhibited growth over the years. On the other hand, long-term assets, including property, plant, equipment, and intangible assets, showed variations, reflecting the company's investment strategies. In summary, the financial statement reflects the company's financial position, showing both areas of strength and potential areas for improvement over the decade. 3. Cash flow. In the TTM period, the company reported a net income of $1.9 billion, marking a significant improvement compared to the previous year's loss of $1.5 billion. Cash flow from operating activities in the TTM was positive at $3 billion, indicating improved cash generation from its core operations. The company also made capital investments and reduced its debt. Looking at the decade-long trend, the company's net income has seen fluctuations, with a significant loss in 2019 but a strong recovery in recent years. Cash flow from operating activities has generally been positive, reflecting its ability to generate cash from its business activities. The company has invested in capital expenditures over the years, although these investments have varied, impacting free cash flow. Additionally, changes in working capital have also influenced cash flow patterns. The company has actively managed its debt levels and engaged in stock-related activities, including repurchases and issuances. Overall, the financial data presented reflects the company's efforts to stabilize and improve its financial performance over the years, with recent positive trends in net income and cash flow. However, it's important to note the fluctuations in performance, particularly the significant loss in 2019, which may require further analysis to understand the underlying factors driving these changes. 4. Valuation. RYCEY indicates a mixed picture of its relative valuation within its sector. Notably, its forward price earnings (PE) ratio suggests that investors may have relatively high expectations for future earnings growth. On the other hand, the price-sales ratios for both trailing 12 months (TTM) and forward (FWD) periods are relatively favorable compared to their 5-year averages. This implies that the company's stock price is reasonably aligned with its sales performance. RYCEY demonstrates impressive growth in various aspects. In terms of revenue, the company has exhibited remarkable year-over-year (YoY) growth of 32.46%, significantly outpacing both its sector median and its own 5-year average. Similarly, EBITDA and EBIT, earnings before interest, taxes, depreciation, and amortization, have experienced substantial growth, with YoY increases of 53.54% and 103.26%, respectively. This robust growth indicates the company's ability to generate higher profits and cash flows. Additionally, RYCEY's forward-looking growth projections, particularly in terms of EPS earnings per share, diluted growth and long-term EPS FWD growth, 3 to 5 year CAGR, are exceptionally positive. The company is forecasted to achieve significant expansion in its earnings, signifying potential long-term value creation for investors. 5. Profitability. RYCEY demonstrates strong profitability. It notably outperforms its sector median and its own 5-year average in several key profitability metrics. The company boasts an impressive return on total capital (TTM) of 61.08%, indicating efficient utilization of capital to generate profits, and its net income margin (TTM) of 9.80% reflects healthy profitability compared to both the sector median and its own historical performance. Furthermore, RYCEY's levered free cash flow margin (TTM) is notably high at 12.95%, demonstrating its ability to convert a significant portion of its revenue into free cash flow. Additionally, the company's asset turnover ratio (TTM) indicates efficient use of assets to generate revenue, although there is room for improvement in this area. While RYCEY excels in many profitability metrics, some areas, such as gross profit margin (TTM) and cash per share (TTM), have received lower grades. Despite the impressive profitability, it's important to consider these areas and assess whether they align with the company's overall financial strategy and objectives. Overall, RYCEY's strong profitability metrics suggest a solid financial foundation. Buying good stocks can be a good investment for several reasons. 1. Potential for capital appreciation. 2. Dividend income. 3. Diversification. 4. Liquidity. 5. Ownership and voting rights. 6. Historical returns. 7. Inflation hedge. 8. Professional management. 9. Tax benefits. 10. Accessibility. It's important to note that while investing in good stocks can offer significant advantages, it also carries risks. Stock prices can be volatile, and there is no guarantee of positive returns. To make informed investment decisions, it's essential to conduct thorough research, consider your financial goals and risk tolerance, and, if necessary, seek advice from financial professionals.